Hey, this is Jeffrey with another edition of Stock Smart, the November 9th, 2021 edition. How you doing, everybody? We've been off for a little bit, but I want to introduce a special guest today, and he will be a regular guest on the show. It's Joe Waterman. Joe, why don't you tell everyone about yourself? You have a long trading background. I know you had some time on the floor where you were an options trader, so why don't you talk about that for a little bit, Joe?
Hello, everyone. My name is Joe Waterman. I was a floor trader for a major bank for about 20 years on the trading floor in Chicago. And I had different roles over the times as far as like being a runner, a clerk, off the floor guy, and an on the floor guy over the time. But so I just am kind of an expert in these option strategies. And over the past few years, I've kind of been teaching beginners about basic options trading.
Now the options trading in Chicago, is that the largest floor for options?
Yes. So like the New York Stock Exchange is like where equities are traded. And in Chicago is the home of like derivatives or options trading.
Right. And did you do futures trading as well?
Yeah, well, we would hedge our trades with futures, and that would be like a term for that is delta hedging. So we would buy calls and puts, right? And then we would offset that in the futures or the stock market.
Okay, and how about like commodities? Any do you have soybeans in your past, things like that?
You know what? The agricultural commodities are not something I'm not familiar with. I did over the time, with the explosion in the ETFs, I saw the boom in that because when they had these like global agricultural like funds or whatever, they would have to mix in like a little bit of coffee, a little bit of corn, a little bit of milk, a little bit of cheese or whatever it was. And that drove a lot of order flow into pits that wouldn't have probably seen the order flow without the ETF.
Right. So ETFs have changed a lot of the buying, haven't they?
Yeah, I mean, I would say so. And that was probably starting in 2000, I would say, where the explosion in that happened. And then I think the volume in the floor was going up in correlation with that.
If you look at one of the ETFs I talked about early in the year was in January and February when we started to see inflation, is really just a hedge against inflation. Like if you're a fixed income investor, to me, one of the best hedges against inflation was just being in one of these commodity index ETFs. And there was one that we talked about a long time in January, and that's the DBC, which is the Invesco DB Commodity Index Tracking Fund. And that thing has done amazingly well this year. If you were in it, it's up 61%. And that's a direct, so if you're fixed income, right? And this is a very conservative investment too. It's not like you're going long on AMC or one of these meme stocks. This thing moves very, so this could be a play for those in fixed income who are not able to make anything in return of, bonds right now.
Yeah, right. I mean, I imagine like a 61% return in a safe strategy is something that's not typical, right? Is that what you're saying?
Well, it's not. I mean, but this is just, I think this would be, if you're looking to find where inflation is, it's just in commodity prices, right?
Right.
So in corn, soybeans, metals, all those things have gone up dramatically, and you'll see it right in this fund. So if you were hedging your portfolio and your fixed income at 75, 80 years old, which I can understand, and you're going, hey, how do I match 5% inflation with a 1% interest return on my bonds or in some kind of money market, right. And you're like, well, how do you do it? Now, this 61%, that's not going to happen often, but this is a play, I would think, for a fixed income investor. So that was something I looked at. Now,
and the reason why that's happening is because the dollars are just exploding and the quantity is limited, right?
Absolutely, because there's so much free money.
Nice.
When you look at it and you can tie it to, and actually, I just sold a property personally myself, and I kind of feel grateful, to be honest, to be out of the market right now, because I'm already seeing, right. I mean, I am already seeing, and look, we as investors, and I'm a fiduciary, I talk about, time horizon. That's the most important thing. So if you're and the same thing is true with your house. I looked at my house, which was where I raised my kids, and I said, well, I don't think I'm going to be here or want to be here in 5 years. And so I've already seen and I live in Marin County, I already saw a big drop when I bought my house in 2008. We know what happened, like the Big Short and all that, 2009, 2010. And I don't know, did you own a property at that time, Joe?
I owned about 5 or 6 properties at that
time. So there were a lot of adjustments happening. And if you're in any kind of a short year kind of situation, like a 3 or 5 arm, you may have been in trouble. I would tell you what I remember happened to me, and it was really proactive on the part of the bank that I was with. They actually came to me, and I was in a shorter term rate because in Marin, there's no houses in Marin that are under 7 figures. And
Okay.
so they came to me and they said, look, we'll restructure your loan. So they did it for nothing. They actually were restructuring loans on their own to make sure that there would be, to reduce defaults.
The funny thing about that is I remember I had like a HELOC on one of my houses.
Right.
And so I think the amount of money the banks had to hold in reserve against the HELOC was higher than like in a traditional mortgage.
Mm-hmm.
And so it was probably around the same time they were calling me, trying to refinance a HELOC or like a line of credit,
Right.
so that they didn't have to so they could like package up the mortgage and sell it off instead of having to hold it against reserves.
Exactly, which is smart because all that is about packaging. And that movie, actually, I thought that movie, you probably have seen The Big Short, right?
I don't think so. I'm not a big movie guy.
To me, that was like a fantastic for a novice to really understand about how they have these derivatives of loans and how they package these mortgages in and how they diversify them and really what caused the problem.
Right. And the one thing, and this is going way back, and I didn't, I'm not an expert in this, but I know there was like tranches of debt, right?
Yes, that's right.
And like, because they had it split up in a way that was supposed to be safe, right?
Right.
But in actuality, it wasn't safe. And so in my world, like when you buy options, you're long gamma,
Right.
which means that you have the right to buy the market when it sells off or sell the market when it rallies, right?
Yes.
And so I think people were taking on these securities and they thought they were safe. Like the amount of money they could lose was what they paid for it.
Right.
But in actuality, somehow, like when the tranches of debt started to break down, they were actually like short gamma and they had unlimited risk on, is the way that I kind of remember that.
That's exactly right. And so the guys who were shorting it, who saw that the crisis was coming, they were looking actually in these gigantic bond papers where they were, where the bonds were made up of like thousands of mortgages, and they were starting to notice the defaults getting ahead of it. And then they invented essentially the short of mortgage bonds, which really didn't exist before.
Right.
Because the line in the movie is, who doesn't pay their mortgage? So but you had people and holding 4 and 5 homes that were getting like what they called like these ninja loans, no income, no job verifications.
No problem.
But then again, so that brings up what I look at all the time, and people who have listened to the show for a long time know I always talk about the 10-year, and the 10-year is at a massive move in like 2 days. And I don't know if that's Fed buying, but the 10-year is down over 10 basis points. It's down to 1.42. I kept looking. It may have been a technical hit again because it went to 157. And if you look, there's some resistance there. I don't know. Are you a technical? I know we talked about this before, Joe, off the call.
Right.
But you're not. You don't really do technicals, right?
I am. I'm trying. I love trading, right? But I look at myself as kind of like a blue collar trader,
right?
And I think, and so
what is that? Okay, so you asked me before we talked on the show, you asked me about the audience. And I would say maybe describe what that means in your idea of a blue collar trader. Like, what is that defined as?
Okay, well, and maybe it's a term I just made up, but like,
but that's okay. How do you hustle? You're kind of thinking yourself as a hustler, meaning you're looking for certain things or certain things you're finding, or you're looking for market opportunities, or how do you?
So I like to I almost like a translator. Like if someone gives me an opinion of a stock, then I can kind of look at, okay, if that's your opinion of the stock, I like to look at the option strategy that I can build around that. And then I look at like a payout. So if I was going to do like $100 bet, I would expect like a $500 reward.
So like a 5 to 1.
Yeah. And so like if we were talking about, I think we
do
might
you have
talk
one
about
that
PayPal.
you can, we are going to talk about PayPal. Do you have one? Is that something, because you told me now, and you're doing kind of an interesting thing too. You're working in kind of a trading room right now. You were telling me something about this when we talked before.
Yeah. So, I left the trading floor like 5 years ago.
So you're retired, right? You're just trading for yourself?
Yeah. I look at it as like kind of semi-retired where I've got younger kids. They're at home still. And so I like to be around with them. And then I was trying to develop before COVID or like during COVID, I was trying to develop like a school where I was teaching people about options trading. and that was kind of difficult, is with COVID.
What did you
And
run
then,
into there? Because that's all done. We should talk about that later off the air. But I was just curious how you approach that, because that's all being done with these video chats now, and I'm just curious.
right.
It
Well, and
should have
that's
been
what
blowing up during COVID.
right. Well, that's what it came to me kind of by accident. So it didn't really work. Like the idea of the school, just with my technical abilities and the environmental, stuff going on, and then my lack of business skills, probably all, led it to not being as successful as it should have been. Right.
Hey,
But then,
as the great Clint Eastwood once said, a man's got to know his limitations.
right. And so then a buddy of mine brought to me this trading room. It's called Awesome Calls.
Awesome calls. Okay, cool.
And it's like a club where you pay a monthly fee, and then this guy that's a day trading expert makes about 10 he makes about 10 calls in the morning. He gives you levels, entries and exits, and then he kind of trades. He simulates some of the entries and exits that he does, and he kind of teaches people about day trading. And
What's your experience? What's your experience on? I don't know the number. I've looked this up before, but there's some large number, and to me, I always consider, like, when you think about your investing strategy and your risk, where you are in the risk curve. I think about options. A lot of them. What's the percentage? There was some number. I think it was in the 70s.
Like 90 or 80%.
Is it 90% that expire
worthless?
Yeah. Is that the number?
Yeah.
So I mean,
I think so.
So what I want to do for this is like, and I joke sometimes on the show. We call it like the average investor. That's when I take questions, and I'm going to drop that soundbite.
The average investor.
And that's what a lot of people right. And that's what a lot of people, when you take your fiduciary exam, they always refer to the person who the SEC is protecting, which is the average investor, which, by the way, is like 26% of the market now. So when you talk about options, you find yourself, when you at 90% expiration, that would make you in a good position to write something like covered calls.
Right. And or just selling options, like selling calls or any option, right? If 90% of them are going to go out worthless.
Right. And that is the number. So, he this is kind of not a warning, but it's just an understanding of what they generally are. And
right.
so,
and no, I'm sorry.
No, go on, Joe.
Oh no, I was thinking, so like a lot of times you got to think of like options as insurance policies.
Right.
Right.
Well, that's when you have like a market maker. So when a market maker is writing these options. So like, do you have experience from that side of it?
Yes.
Okay, so tell me that, because the process generally, like and there was a good short today. We're going to talk about that in a little bit. But when a market maker starts writing, they're going to start buying the position, right?
So the way I traded on the floor, the way that we trade on the floor, is we were managing our inventory just like you'd manage any type of inventory. So we'd have a theoretic value, and as we would buy more options, we would lower our theoretic values, and hopefully someone would buy them from us, right? Because we were like mean reverting traders, meaning that we think that like over time it's going to come back to like the average price,
right,
or the average volatility,
right.
So as volatility got cheaper, we would get a longer and longer position on that, expecting it to revert back to the mean in the future.
I see.
Does that make sense?
It does make sense. I think what we're gonna do, and we'll probably do it the next show. And by the way,
okay.
Joe's gonna be on. We're gonna do a big show in. You're gonna be remote, and I'm hopefully, Joe, if I can figure it out, we're gonna maybe have video on that one.
Okay.
But maybe we can do an specific example, so that people can follow a little bit easier.
There was a. Oh, sorry.
No, go on.
I was going to say there was a trade today in the PayPal that I thought.
Well, let's talk about PayPal. So let's do that.
Stock watch.
Okay. Now, so like you probably know like more about the action on who was buying PayPal and what was happening.
Right.
But last night, a friend of mine thought that PayPal could rally. And so he bought some calls going into the earnings.
Oh, and let's talk about that for 1 second. So what happened with PayPal going there? So earnings were announced. They were this morning, right?
Yeah.
Okay. And this is an expensive stock. I mean, PayPal has been an amazing stock, but its price to earnings is like 56 right now. And that's after today, where they announced earnings. The stock drops like 12%. It's down like 202 right now. And it is like a big bottom it hasn't seen in a long time. I think in years. I can't remember PayPal getting taken out this bad in a long time.
Right.
It's a massive takedown. And there is news. Let me set up the news for a second. So the news that came out on PayPal was pretty interesting. There were two different things that really, the first announcement was a great announcement about PayPal being in a partnership with both Venmo and Amazon, where you're going to be able to purchase things on Amazon with PayPal, which is great. That should be like, wow. And that would be one, like if you're watching like the pre-market, I don't know what time they announced earnings, but if you're watching the pre-market, it probably like shot up. And you know how like sometimes like in the after hours market, it's kind of crazy because the after hours trading is insane. So I'm guessing pre-market, when that news came out, that thing probably shot up the other way, but I didn't see it, but I'm guessing it shot up.
No, you were right. And that's what that was the lesson I was going to say.
Right.
Was like, so I think, I'm just guessing, but I'm probably pretty close. PayPal was probably like 225 on last night's close.
So it was, I had it at 229, 228, 229. Yeah.
229. And then there's weekly options in this, right?
Right.
So in the trading room that I'm in, the guy was like, no, I don't want to overnight PayPal, but I don't want to short it. And I think it's beat up. It could rally a little bit, right?
Right. Well, this thing was a star. I mean, and I wonder who had this insight here, because this thing's gone down from like 310. Now it's lost a lot. I mean, this is down 100 points. That's a third of the market cap.
Yeah, in a stock that like should not be moving in thirds, right?
No, for sure. It shouldn't move 12%. I mean, you don't see a established stock like this with the earnings potential that they have going down 1/3.
Right.
It just doesn't happen.
And so the stock was trading 229, right?
Right.
And my buddy bought a 1 week call 10 times for $2. So it was a $2,000 bet, right? And I think what happened overnight was exactly what you said. Based on the news, I think the stock got as high as 241.
Right. But he couldn't, but that was probably pre-market, so he couldn't unload that option at that point probably.
Well, that's what he thought. And so he could not have.
This is like the rest of the story. So keep going.
Yeah, no, and this happens like a lot. Like when I run into people that are trading these things, they don't realize it, right? So when the market's closed, you can't trade options in a lot of these names, right?
Right.
Can't.
Yeah, go on.
You can take an offsetting position in the stock market.
Oh.
Right. So when
you would buy your own hedge right at that point.
Well, yeah. So in the extended hours, right, in the pre-market, he could have sold up to 1,000 shares at 241.
That's right.
And because he had the right to buy it for 230.
Right.
And so we got in there, and I was like, "Did you sell any deltas?" And he's like, "What do you mean?"
Oh, and he didn't think of that, or he wasn't aware of that.
He just wasn't even aware of it. And then he trades on a site called Webull.
I've seen Webull. I think that's it. They're trading crypto too, I think.
I imagine. I think it's like one of these things that's really popular with the younger, the Robinhoods and the Weebulls and stuff like that.
And we could talk about it on another show, but that is expanded. I mean, that's again why the retail traders at 26% right now, because of sites like Robinhood and Webull, and there's several others. I can't name them all off the top of my head, but there's several. That's the big boom in the free trading, obviously. So tell me, he set this up. Was this in the room you go in Awesome Calls?
Yeah. So he got the lead going from that room.
Right.
And then, so he bought the 230 call, stock was trading 229. He paid about $2,000 for the right to own 1,000 shares if the stock was above 230.
So he bought 10. He bought 10 calls.
He had bought 10 calls. Yes.
Right.
And then the stock did, on the news that you mentioned, right? It rallied $11, and so that delta was initially a 50 delta.
How fast was that though? The execution, that's like where we talked about execution before. Now, how much? So I don't know the time. You could break it down, right? Because they did a call. They did an earnings call, right? And so if you're sitting if you're sitting on the earnings call, and I read the story that I read it, they announced that initial thing, the Venmo, PayPal, and Amazon deal. And then the stock probably goes up, like you said, it went up $10 or about, I don't know, would it have been about 2 or 3% at that point, right?
Yep.
And then essentially the bottom comes out. And so he may have had less than 5 minutes to execute that.
Yep. And so he could have executed that, right? And he had up to 1,000 shares he could have sold. And so like typically, I might have sold like 75% of that
Mm-hmm.
at that point in time. And then now the stock's trading 205. And he still has it's Tuesday. So he's still got 3 full days on that option contract that expires on November 12th.
Right. But it
So he
sounds
could have bought in.
it's still getting deprecated, right? I mean, the option value, the premium.
Yeah. So theta, so that's all the options value price is changing, but if he would have known how to sell shares in the extended market, he could have gotten up to 1,000 shares off in the extended market based on his long call position. And then he could buy them back.
Right. And he could have bought them back at
210.
Right. And he would have
And then he still got 3 full days on the option.
So he would have been up at that point. He had the option. He could have bought 15. He would have been up like 1,500 just based on the option that was going to lose money or potentially expire.
I think 11,000, I would think.
It's that much?
Well, because he had 10 contracts, it was 1,000 shares from 230 up to 241.
Oh, wait a second. So 1,000 shares, and then if he got rid of them when he sold them, he would have been. You're right.
He would have been up 11,000. It was a $2,000 bet, right? $2,000 trade. But then, we roll the dice, right?
Mm-hmm.
Now the stock is trading below 230, right? So he's got up to 1,000 shares, whatever he sold, that he can buy back in. And he's got 3 more days. So if it pops back up, he can sell them again. If it sells off, he can buy them back in, right? And that's called scalping gamma.
That's pretty interesting, actually. And I think, these stocks, usually when you watch some of these positions, you see something like where they have like a 3-day rule sometimes on a stock. Like you could see that this year, Amazon had they do it all the time. Amazon's not like a great earnings winner generally. Right. I mean, it's a great company. The stock just continues to go up.
I think they were saying it sells off usually after earnings is what the expectation is.
Pretty consistently. If you pull up one of those charts where you have the earnings day on there, you're going to see over the last 2 or 3 years, because I know this is a holding that I have in my clients, because it's a conservative, great growth stock that is well established and everybody knows it. Right. I mean, a lot of times, the stocks that when you're managing other people's money, they want to see Amazon in their portfolio. They all want to see Apple, of course, because they have tons of Apple products, and it makes sense. And that's one of those stocks that I'd say if you're a long investor of equities, Apple is one that's in everybody's portfolio that I know of. But when you see Amazon, what it did is it had the classic 3-day rule. It got hammered on earnings, and now has been up 6-7% in like the last week. 3 days after the earnings. So to me, when I look at this, and I might have a second to pull up that stock on PayPal, but that's an awesome insight. So he still has options, is what you're telling me. Yeah.
And so, I mean, they're not worth, what they were worth, right? And he didn't understand that he had the right to sell this in the extended market or the pre-market, right?
Right, because he was thinking mainly that the options market is only open, regular trading hours.
And I think what I want the listener to understand from this is that you can get your profits in the options market, right? But if you don't like the bid-ask spread, because a lot of times people want to trade options that aren't very liquid, right? And that means there's very wide bid-ask spreads, which means it costs you a lot of money to get in and get out of the stock, right? So if market makers or if people are giving you these wide spreads that you don't like, there is an opportunity to take your gains and offset them in the stock market. And that's what this person would have done. And you can offset those gains, or you can lock in those gains when the options market is closed by trading the corresponding shares of stock against it.
So that, I think what you're kind of alerting to the user, or the listener, I should say, is that this is complicated. And to really get your value in this options world, there's a lot of different ways to skin a cat here, and you really probably need to know more than you think you do.
Yeah, it is complicated. But the funny thing is, with I was.
But Joe, you've been doing this for years. Don't remember, right? There's a whole bunch of people who are like 21 years old, and you see it on those Reddit boards who just started 2 years ago, or a year ago, or 3 weeks ago. And so they're in those positions. Go on. Yeah, go on.
Yeah, sorry. I've got a little puppy here and he's kind of acting up here.
That's
I
all right.
apologize.
That's all right. We've
But
had puppies on the show before.
he's a good dog, but sometimes he gets a little frisky.
And what's
But
his
yes,
what's the name? Is it Alpha?
yeah, right. My daughter's named him. It's Teddy.
There you go.
So he's a good dog.
Good.
But hey, sorry. Right here.
That's all right.
So I don't know. I kind of lost track on there, but we
We're
were
just talking about
about.
how there's a lot of different ways to work in this option market. I mean, where you look
Oh,
at
and
it and you're just,
we were talking about the beginners, right?
yeah,
And not understanding like all the tools that are in the toolbox. And you don't have to like the one mistake a lot of people make is they're afraid to actually start executing, right? And I think you just have
absolutely.
to control your size and control your risk, and then just start to take lots of reps, and then you'll get better. You'll get more experience and you'll get better at it. But and execution is just something that. Sorry, I'm gonna leave him
But there,
upstairs
and
here.
that's fine. But there are sites too where you can execute these kinds of trades without playing, with not real money.
Yeah, and paper trading is something that I think is really important
So
for the beginner to
define
start.
paper trading so the listener will understand what you're saying.
So I always use TD Ameritrade's Thinkorswim platform
Okay.
because that's the one that I'm familiar with. And
I've
there
seen
is
it
like
for
a lot of
sure.
platforms out
And
there,
there's a lot
right?
of YouTube help on Thinkorswim too. I've noticed a lot of different things. There was one I just saw a program about covered call writing, and they have a whole how you can set up your account to get to probably figure out the probabilities and look for the value. Like you're talking about like a 5x return, and
Yep.
they have a lot of options in there.
Yeah, I mean, so it does like I think the graphs are a reason why a lot of the day traders like it because the quality of the graphs are really good. I like it when I was shopping around the different platforms. I just thought the alerts and like the bells and whistles that were in the platform were very professional,
Right.
and so I wasn't so concerned. I mean, costs have gone down to nothing, right? Transaction costs. I
That's
was just
right.
more concerned about getting the most like functional system, like the most professional system out there. And that's where I kind of landed when I was looking at it was TD. And then when you're trying to teach a lot of people, like you can't be an expert on every platform. So you kind of have to make some decisions like if you ask a question, I can answer it if it's TD related, but
Right.
if it's not, then you're on your own.
And we
And
talked a
that's
little
what
bit about
happened with this guy
yeah.
this morning because he was on this Webull, and I was like, well, I showed him how I would sell something in the extended hours on TD, but when I went to the Webull platform, I had no idea how to sell it in extended hours because
Oh.
it just looks different, you know?
That's right. Yeah, I'm sure they must have it. I would imagine. I'm sure they
Oh,
have something.
yeah, I'm sure they would, but it's like, you
Sometimes
know,
though, some of those programs though, you need another, and I wonder if that was it. You may need another disclosure, right? Because there's a lot of volatility and very little. There's not a lot of what's the word, liquidity at those times. A lot of times.
yeah,
So you get really crazy swings. I mean, we're going to talk about after we wrap up PayPal, and I have one other little anecdote on it too. But you'll get really crazy swings from those early morning traders. Like I know that on Kramer on CNBC calls them like the pajama traders, but you get a lot of weird things where stocks get wildly
and
overbid and
and those are great opportunities, right?
right to go
You know,
against.
oh yeah, like when things get overdone, you can really kind of go in there and make a bet that might not be as risky
For sure.
just because the baby got thrown out with the bathwater is what you're kind of hoping for, right?
No doubt. And and one of the things, okay, so let's wrap up on PayPal. And this really, I was looking up some data on this. So 5-year history right here, 5-year history, PayPal right now. And I know you said you don't use a lot of technicals, but I love technicals
Yeah,
because
right.
they have certain bounces. They're just it's a part of a fundamental thing that just happens. And I would tell you one I love and I talk about it on the show a lot is relative strength index or RSI.
Okay.
This thing for 5 years, Joe. Now 5 years. It's a long traded company. This is at the lowest RSI it's been at in 5 years. So I'm telling you, this probably, and I don't know how that's going to impact what your friend's doing that's holding those call options, but this
Cause.
thing is so set. It has never been this low, and
Yeah,
so
it's just
it's way oversold. Is the point? So, RSI goes from 30 to 70, which is like the neutral range. But when you get under 30, which is at today, that's generally a buying opportunity. So I don't know if this is going to have the 3-day rule or what, but this thing has gotten shelled, and I would consider it way oversold. That could be an opportunity for somebody. Go on, sorry.
Right. So that's called like a swing trade is what.
Right.
Like I think like the Reddit guys or the day traders or whatever, they use a term called swing trades. And that's like a day trade is when you're just executing in and out same day, right?
Yeah.
A swing trade is something that you can hold for maybe a short period of time. It could be a couple of days, probably out to I'm guessing like the 1 month period or a little longer maybe.
Well, or right now would be the time to maybe buy a call. Maybe a long dated call, like 10 calls out 2 weeks from now or a month.
And so what I was going to say was that so a guy like you, if a guy like me and a guy like you work together, I'd be like, okay, where do you think PayPal is going to end up maybe in the next, 2 weeks?
Right.
What would you guess on that?
Oh, I think it's going to be up. So let me pull up the chart again. I had it and I had another screen I was blasting back and forth. Well, to me, I'm going to look at it from a technical. What I don't like is that it broke the technicals of the 220 and now it's going down to like a year low, which would be like 194. But for me, looking at RSI, which to me is a great indicator, a very strong indicator of where something's going to go. I think this thing's going to end up back probably where it was today in the morning, like 225, 230. I just think it's so oversold that technically it will bounce off that. It's too low for 5 years. This is not this is not a company. Yeah, they had some guidance issues, but this stock's also dropped a third.
Okay, so now there's a couple of trades, and I put you on speaker for a second. Let me know if you don't.
No problem. No, it's great. You're good.
Okay, so we could do the 220, 230 call spread.
Mm-hmm.
I can buy the 220 call for about $1.60, and I can sell the 230 call for 80 cents.
And now that strategy, when you do a spread like that, is to get to essentially buy the call at a lower price. Now you limit your upside, right?
Yeah, so I'm financing, right?
Right.
I'm buying one insurance policy, and I'm trying to sell another insurance policy to make it cheaper.
So what's the total? So when you get the sell and the buy, what's that looking like? What are you buying it for?
So I was going to say you could pay 80 cents and your max price is, so if you were right? So today we could pay 80 cents or $80, right?
Uh-huh.
And if we are right and PayPal goes back to 230 or higher in the next 2 weeks and closes there, right? Then we would win $1,000 on our $80.
Well, I mean, and we can't we can't make specific stock recommendations here, but that we're talking about strategies, but that to me seems like an interesting strategy.
Right. And that's one. Okay. So that's called the call spread or the vertical spread. Now there's also something called a butterfly. So the vertical spread's nice because if this thing went to 300, we would still make that $1,000 on that $80 bet, right?
Right. But the only thing is when you do the spread, you're cutting off your maximum profit if it went to 300. Right. But you're also getting it for 80 cents.
Yeah. And you said you thought it could get to 230, right?
That's what I think it'll do. Yeah.
Yep. And so, so now if you told me, hey, Joe, I think this stock could go to 230 and there's no way it could go to like 233 or 232, but 230, like 227 to 232, that's the range I'm putting on it.
And if you look, let me give you a technical on that. If you look at this stock for a year, the technical resistance is going to be right around 229. So to me, I think it'll rebound within 2 weeks to that number and then probably hit some resistance and then try to go sideways a little bit.
Okay. And so a lot of times what I'm doing when I'm working with somebody, right, the 220 call would cost $1.60, right? But I gave you the vertical spread, the 220, 230 call spread that cost 80 cents. There's also a trade, if you know exactly where that stock is going to land or you're pretty confident, there's a trade called a butterfly, and that's buying the 220, 230 call spread, and it's selling the 230, 240 call spread. And if you did that, you could get into the trade for about 35 to 40 cents. Right.
Wow, and that's actually that. So that's like a more complicated layered version of an option, right?
Yeah, it's actually just taking 4 options and it's combining them into one strategy.
That's really interesting. So is that sort of like when you would do like so you're talking about like an iron butterfly?
Well, iron means there's calls and puts.
Right.
It would just be a regular butterfly because that's all the same type. So that's all calls, all puts.
Got it.
And then you can also skew these things. Sometimes you might hear the term irregular butterfly, and that's when they will change the width of the vertical spreads a little bit, to get in the trade a little cheaper, but that's like a higher level thing. But I think what I want the listener to understand, and this happens to 90% of the people that I talk to, is that they want to buy stock. Not the average guy doesn't usually sell stock. It takes a little more sophisticated investor usually to do that. Not that they shouldn't, but that's the way it works out, right?
Right.
And it's always usually breaks down to the call spread, or the call butterfly. And comparing those three strategies with their opinion can kind of lead you to some pretty good risk reward relationships.
That's really interesting. So there's opportunities when a stock gets hammered like this. If you want to look at it, that's a pretty interesting way to describe it in the options. And we hopefully when we do video, we can have some charts on this in the future, and we are going to try to do that. But that was a really interesting breakdown, and I'm going to be curious. And when we talk next week, I want to maybe you can check in with your friend and see what the execution happened, so we can kind of update everybody.
Definitely. And just to put one more little twist on that, right?
You got it. So there's another option.
Yeah, well, or you could sell a put or a put spread to help
Sure.
finance that.
Right.
So like you said that this RSI is so low. So would you be pretty comfortable selling the 180 put?
Probably.
Right. And you could get like 70 cents for that.
That's a great, you're right, because it's probably not going to break through any lower. It's just been I mean, this one, I actually haven't been following this stock, and then you mentioned it before we got on. This is not one that I hold. This is not one that is in any of my accounts or managed accounts. But this is really...
Yeah, I'm not saying anyone should do it. I'm just saying this is what you could do.
Yeah, this one really has gotten, I mean, it has really gotten just a third for this stock. Now, that price to earnings at 56 is still pretty heavy, right? So, but a lot of these growth stocks, when you look at them, if you look at some of the ones that have done really well during the COVID period, like Peloton's gotten hammered. A lot of these have gotten, have retraced back to some other number. But
we were talking about that a couple of days ago too. That could just be the rotation out of the COVID stocks into, the pre-COVID stocks again.
Well, and sure, and things like you can see the moves in like Disney, which was a kind of a moribund stock that sat in the 120s for a long time, is moving in the right direction. A lot of these cruise lines are picking up again.
Yeah, so in the room that I was in, right, the guy mentioned that when Myrna sold off like 100 points in 2 days last week, I think it was.
Right, Moderna.
Yeah.
That's one, though, to bring a little more insight into that's one that I feel like that they have a lot of technology that's going to seem that now there's a lot of focus on that company because of what's going on with with COVID with that. And Pfizer came out with their news that they're going to have a pill that you can take that's 96% mortality, meaning if you take it, you're likely not going to die. And then the rates of death from COVID become what like the flu is. So it becomes...
And then you go on vacation and party again, right?
That's right. And that's what people are doing. You can see, well, look at one. Here's one that's kind of a nice bellwether or a nice way to see what's going on is an ETF that I'm not in, but it's called JETS, which is just essentially the airline stocks. If you look at this thing, this has had a good move, up about 10%, 10, 11, 12% since like October 29th. So that's like 10 days. This thing's returned about 11%. So that's...
What's it off high, do you know? Is it easy to see, or is it...
What are you looking to see? So in the 5 days, so the 5 day on JETS is about 9%, 5 day. So the 1 month on JETS is, it had dropped. So we had been getting, kind of like there was an announcement like, hey, COVID's over. Like it's just kind of like happened in the last week. And so
it happened in like minutes.
Yeah. And then so this JETS has really moved up in a great way. But that's a good one to see as a barometer kind of for what's going on with travel, obviously. And
I did to make it like an easy trade. So I bought, when that was happening, I bought January 25-cent calls in Royal Caribbean, like in 2 cruise lines.
Right.
I bought 25-cent puts in Peloton. So and those little tiny puts are called like kurtosis options.
Okay.
And so they're only got like a 1 or 2% chance of actually like working out, right?
Are those like micro? Are they micros or what are they?
When you say the term micro, I'm thinking of like less than 100 shares of stock per option.
There was something that the CME announced that they were doing, and I remember it was about 2 years ago, and they were talking about micro options, and I don't really know a lot about that marketplace, and that's what I was curious if that's what you were describing.
Yeah, it's not. These are just, I think what the micros are like when I don't even know for sure, but I think they're like fractional shares. It's like you're getting a piece of it maybe,
Got it.
but I'm not sure about that. I can't really speak to that. But like kurtosis are options that are typically under 15 delta, so it's got less than a 15% chance of being in the money. And you can imagine with that small percentage, they're cheap, right?
For sure. So that's like the
But
thing where they're so cheap if it goes great. And I remember that's actually one of my favorite scenes from like is people are betting, everyone's betting it won't happen, right? So it's
right.
inexpensive. But when you hit that, it's probably like amazing.
Oh yeah, and like so you're buying a 25, and they don't move like if it trades 25 cents, you're probably 20-cent bid at 30, right?
When we
And then
do
someone buys
our
like
next show, Joe, we gotta pinpoint one so we can see what the cost is and let's just nail one out because I want to know a little bit more. I want to share that because I think that's a really interesting kind of viewpoint on because the strategy is, hey, we're not going to lose a lot, but when it hits, it could be amazing. That's kind of actually
right?
a risk reward that somebody would want to sit in for.
Yeah, so like you're going to buy a 25-cent option, and you're not going to sell it for like 35 cents. It's going to go to like $1.25.
Yeah,
Like,
that's actually an insane movement, actually.
and you don't have to get all the way there,
Right,
right? So like you're buying like maybe a 25% move, let's say, right? But
right.
if you get 10% of the way there, that option's value is kicking up into high gear, and you don't have to hold it. You can just get out of it early.
Sure, or roll it or whatever.
Yeah. So I do so I think when you think like a big move is possible, right? I like to make small, cheap bets on these little tiny kurtosis options, which are under about 10 or 15 deltas, right?
Right.
And then if you get a decent directional, if you're right on direction and it gets there quickly, they're going to probably kick up some value. You're going to have a decision to make. Like, do you want to sell this thing for like, 3 or 4 times investment, or do you want to hold on to it and see if you're right?
That's really interesting. We're going to definitely want
But
to
then
break one
again,
of
you're
those
going to
down.
have a high probability of not getting the move and it going to zero too. So it's part of the game.
That's really cool. I want to talk about one other thing that happened this morning. We talked about like the liquidity being light in the in terms of the pre-markets, and that is one of the risks when you're pre-market trading or after hours is that not everyone's active, right? So you're getting these wider spreads. And
Yeah.
so one that moved was really interesting today. So Luminar Technologies, and it's got a really good ticker. It's laser, right? LAZR. And yeah, and they're making a lot of these laser technologies for EV space, which to me is one of the hottest spaces that, if you're going to be just like a long investor, just a regular investor who wants to buy and hold, which is, it's still a great way to make money long term. And if you're one of those investors, you have to have some exposure to EV. And we could talk about more. I have a couple of things that, I have my clients in. But this one, so there was an announcement today at a conference that NVIDIA was holding that they're partnering with this company, Luminar Technologies, and that they're going to use their lasers or sensors essentially for their NVIDIA Drive Hyperion autonomous vehicle platform. So it's like an artificial intelligence-based computing. That's where everything is AI. And they're going to commence production in 2024. So obviously being involved with a juggernaut in the semiconductor industry like NVIDIA is going to be a huge boost to the stock, right? But this thing was crazy. So there was this is another opportunity, right? There's an opportunity here. So what happened in the pre-market, and if you have experience watching what happens in the pre-market, this stock moved up 60% in the pre-market today. So it went from, let's see if I can pull up the numbers. It was somewhere.
I had 17.5 up 7.
What
So
did you
that'd be
say?
23.5. So I think it closed 17.5 last night,
Right.
and it was 7 on the news this morning.
Yeah, incredible. And then, but so what happened is though, but then like reality hits, right? And you get more liquidity in the market and it kind of finds its true value. And now it's up only about 18%. So those guys who got in and bought that thing in the pre-market are getting shelled right now.
Right.
So it's just an interesting thing about, maybe pre-market trading isn't for everybody is what I said, but maybe that was an opportunity for someone to short that on the other end.
Yeah, short sellers. I mean, I think it's probably, it's just getting comfortable doing new things, and I think your size, like when you're learning something new, is going to allow you to experiment and get comfortable.
No.
So I tried to sell laser today.
You did.
But when it was trading 20 half, so like the notes I had were that if it comes down below 22.5, it was like an all-day fade down to possibly like 19.5.
Right. So now this stock too. So going into today, what we had probably is there was probably a lot of short covering in the morning.
Mhm.
So that's why the stock really bumped, and then they probably sold out and got out of the position, which dumped it. So
Yeah, I mean,
so you saw a big move in this, but now it's kind of settled in. I mean, it's still positive news for the stock. It's just showing when you're executing, and we were talking about this on a call last week. Your execution times are so important in these stocks. But this is
yeah,
So go on. Talk
it,
about that for a second.
looking for that, like, so once you get that, like, so on the notes that I have, it has a term bottom, and these are terms that I'm getting more familiar with too, bottom curl bounce, right? And so, in that thin market, there was a lot of buyers and nobody wanted to sell it,
And
right?
thin market referring to low liquidity.
A low liquidity,
So not
right?
very many buyers in the market because I don't know what
Or a
percentage.
lot of buyers. Yeah, I mean, there's a lot of people probably wanting to buy and few sellers, right? And so they have to get more and more and more every time they sell something, right?
Right.
And then some other, everyone else wakes up, people are like, no, that's too much, boom, 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 stock starts to come off to a point, and then we were looking for bottoming around 20, 19 and a half to 20, and then the rest of the day, like you were kind of saying with that 3-day rule, right?
Mm-hmm.
Like people are going to start scratching their head and saying, hold it, this is like laser is with this great chip maker, and so then you kind of, once you see the stock going back up is when you're starting to get in on your longs again, I think.
There you go. And so this stock has really had an interesting ride. I mean, if you're reading this from a technical standpoint, you're thinking the true bottom probably was around 15 or 16. And this stock at one point was up 400% in a very short period of time. It's still up 100% for the year. And
Right.
but it was as high as in the 40s. It was like 42 in December of a year ago. So this thing really took off from November to December, and moved like from. I don't know if this was a meme stock. I can't verify that, but this thing went from like 8 to 40 in like a week.
Right.
And then so it was up about 500%. And then this is now again a technical reader. This is not a good looking chart. This is a lot of downhill slides until we got to today, where we see that it made a nice upward. So it's probably found some kind of a true bottom here. And although maybe in the pre-market that was a little bit overstretched, this thing still looks like probably a pretty good stock to be involved with NVIDIA. I mean, that NVIDIA stock alone, we're not going to talk about that now, but that stock has been just a monster. But Luminar Technologies, do you have an EV car, Joe, at all? Are you interested in that space?
You know what? I've got the Tesla truck. I've got a reservation out for that, but
when is that? When is that coming? That's probably still a ways away.
yeah, so I imagine with the chip, everything got pushed back. I think the deliverables were supposed to be in the time frame we're in right now, but
does that come with a broken window? Right.
I think, right?
Yeah, that was a great.
That was hysterical. That's why I knew I wanted that truck, because after that window, I was like, this guy's gonna make the best truck ever.
He's great. He's great. Actually, I've been considering it. I like the feel of a car with an engine, but I've been considering a Tesla now because I moved into a place that has like EV charging right on this location. And I was thinking, this is the time to maybe get it. I've been looking for an interesting business that came up during COVID and we're going to probably wrap pretty soon, but an interesting business that came up during COVID was this lease trading kind of concept, where if you had a lease, and a lot of people got rid of their cars during COVID because it started the non-commute thing. So, yeah. But you can't even find a car now. Again, it's supply chain issues. Cars are probably sitting in Long Beach somewhere not being unloaded. But there's a lot of issues with supply chain things, and we'll talk about that on another show. But I've been looking at them, and there's these things like swap lease and lease trader. And I thought the ideal way for somebody who's not sure if they want one was to assume kind of a lease. They're not really assumable, but you have to recontract with the company, and then you can take over someone's lease, like a lease takeover. And I thought that would be a good way to probably test the EV market, because I'm kind of unsure. But every time I go in one, every one of my friends, and California, there's probably more Teslas than anywhere, right? And especially where I live, everyone's so like environmentally conscious here. If you water your lawn, and I know you're from the Midwest, so you're used to getting soaked with water.
Right.
But out here, if you water your lawn, you're on that stupid Nextdoor app. You're getting like hammered like I can't believe anybody has a green lawn. Like that's the kind of crap you see on Nextdoor. And so you're being shamed by the neighborhood if you have a green lawn. And I told people, because I was selling a property, and I'm like, I'm sorry, I'm going to water my lawn right now because I'm selling my house and I want it to look good. But that's kind of funny. But that EV space, good luck with that truck. Do they have an ETA on that at all?
Well, I mean, I think we're still probably at least a year out. But the reason why I liked it was I think GM was coming out with one for like 120,000, and there was another one that was like up in the 150s or something like that. And the Tesla with 3 motors was 70,000.
Wow, it's amazing.
I thought you got to do best of breed. You got the best one, and then the auto drive feature was like maybe like 6,500 or like 7,000. When because you can lock in that auto drive feature.
Right.
And then some people were talking that feature could be like worth as much as like $150,000.
That's amazing. Now, where do you think? I had a Kia I rented one time, and Kia. My son goes, "Oh, Kias." My son's a mechanic. He's still in school, but he loves working on cars. He's rebuilt like 3 or 4 cars, but he's like, "Dad, Kias, they end up in the shop all the time." So I had a Kia that had like the auto drive on it. And it was pretty awesome, by the way. I thought it was pretty amazing what it could do. Now, I didn't feel comfortable with the braking, so I never really got close. But as far as staying in the lanes, I thought it was pretty good.
The drunk driver worked well.
Yeah, where you have like, it's like the airplane movie where you have like the inflatable, the autopilot comes up and then you're like sleeping next to it. Yeah, let's not joke. That's actually what some idiots did, like in Teslas before, and they have to have that large disclaimer about how it really isn't autonomous in the way that they describe it, because they've actually gotten a lot of heat about how they've described autonomous.
Well, and I think that's the thing too, like with the Tesla, is like the battery and when it catches fire, it's like it's over, right?
Yeah,
you never hear about them.
Well, what I imagine is I sold the house that I wanted it for, but I wanted the Tesla solar, but I'm not really even sure where that's at. But that was always the joke. It'd be like you'd put it on your house and then your house would start on fire.
Yeah, didn't like a couple of Walmarts catch fire or something like
that? They did. A couple of warehouses caught fire. Not great story, but yet the stock persists. And right now, that stock is actually corrected a little bit. And on some news that Elon was, or whatever his new Twitter name. He has a really funny new Twitter name.
Lord something.
Yeah, he's hilarious.
Lord, whatever.
I mean, you got to give it to him. I mean, guy's taking massive chances with his own money and continues to develop crazy products. I'm not a big fan of that stock because I don't even know what the price to earnings is on there, but it's hardly, you wouldn't see Warren Buffett buying Tesla. Not that he's gotten it all right, but
he can do things that other CEOs can't. Like, who else can like take a poll on if they should sell stock or not? If any other CEO would do that, the SEC would be breathing down their neck.
Right, and it's a value stock at 376.55 P. So this stock has gotten hammered the last couple of days. It's probably hitting. It's lost. I mean, this thing's still up 150% on the year.
Yeah,
but it's gone down today. It's down another 10%. So there's some selling going on. I know that the insider he is selling stock from what the news reports say.
Yeah, he's got like a $15 billion tax bill, I think, at the end of the year or something like that.
Why do you think he moved to Texas?
Right? No, I mean,
California taxes. I mean, he's pretty funny though in his statements. He said something about how he got rid of all his property attachments. And he's been on like that Joe Rogan. If we get big enough, Joe, we're going to have him on here.
We could have him on. That'd be awesome.
Wouldn't that be funny? And, and I don't know if he needs like the sticky wiki or the sticky icky to come on or whatever, but they were joking about maybe a cigar would be good enough. But he was saying about how he got rid of everything that he was attached to and really was living in a very small place in Texas. Kind of interesting.
Oh, really?
Yeah. He sold all his houses or whatever he had, but I would imagine he has a massive, massive tax bills every year. But hey, Joe, right. Awesome on the show today.
Thank you.
We're gonna leave. We have to leave something to talk about next time because we covered so much information, but it was really awesome getting your perspective, and what you've been through and what you're seeing happening, and me kind of filling in with the fundamentals. It's really a great combo, and I appreciate you for being on. And we have a bunch of things we're going to catch up on next week. I want to talk about those ketosis options. That's what you call them, right?
Yeah, right. Just the tiny wing options or kurtosis options. Yeah.
I want to talk about those. I definitely want to recap on what's going on, what your friend does with the PayPal move.
No problem.
And we gave a lot of different ways you can execute on options, which was pretty interesting. But hey, thanks for being on the show. You want to say one more thing?
No, I just want to say thank you, and it was a pleasure being on the show, and I appreciate the opportunity.
All right, thanks. Joe Waterman was our guest today, and we'll see you again next time on Stock Smart.